Good morning, everybody. This is Kathy with Premier Companies. Welcome to one of our webinars. This morning I have with me Gary Voigt. Good morning, Gary, with Baltimore Life on the line.
Good morning.
How are you doing this morning?
Fantastic, Kathy. Thanks for having me.
Wonderful. Well, Gary, we do a fair share of business with single pay, and you guys fit the product right down to a T with almost every type of product that we can use for single pay business. And I really love the ease of your webpage, running quotes, and everything about your products that you offer. Can you go over some details with that today with us and share with the agents exactly what Baltimore Life has to offer agents?
Absolutely. That and hopefully a few sales ideas along the way.
I love it. Thanks.
All right. Well, good morning, everyone. Let me pull this up to full screen here. My name is Gary Voigt, the Vice President of Corporate Marketing and Communications here at Baltimore Life. Certainly want to thank you for investing some of your very valuable time today to learn more about Baltimore Life's tax-efficient asset transfer program. In today's presentation, we're going to talk about two products, our two single premium products in our portfolio. That's our single premium whole life and generation legacy product. Both of these products are really designed for your senior client in mind who have what we like to call some leave behind money. Money they don't need to live on. They simply want to leave behind, creating a legacy to the next generation and doing it in a tax-efficient way through the use of life insurance. No matter whether your client has money that's coming from annuities or qualified plans, or they have money coming from after-tax cash funds, CDs, money markets, mutual funds, we have products that can satisfy both of those situations and the need to create a legacy. Let's talk a little bit about the marketplace. It's absolutely huge. About $1 to $3 trillion in wealth is being transferred, and that's happening each and every year, and that's going to continue to happen between now and the year 2052. We know that about 55% of your clients' wealth is moving on to their family members. About 16% of their money is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving on to people and organizations they know and love. The question is, are they maximizing the amount of money they're able to pass along, and are they really doing it in the most tax-efficient way? Well, the first product we'll talk about as a solution for that is our Generation Legacy product. And this product, as I alluded to, is designed to take single premium dollars not needed for daily living from annuities and other qualified plan funds, IRAs, 401ks, and the like, and pass those money into this type of a product package. Obviously, it's a client's goal of leaving a legacy, increasing their estate value through the use of a single premium product, and do it tax efficiently through the use of life insurance. We'll be getting to each of these bullets in more detail, but the issue ages for the product are 60 through age 80. And Baltimore Life very uniquely has packaged this such that you can write a single application, and with the issuing of that product, we're going to issue actually two products, a single premium immediate annuity that will receive the transfer of those funds, along with a limited premium payment whole life product. Once issued, both these products are seamlessly administered together by Baltimore Life, nothing for the agent to do, nothing for the client to do, to provide all the benefits we'll talk about with you here today. We'll also be getting into our simplified underwriting process, as well as our point of sale underwriting, which will allow you to get immediate underwriting decisions in well over 90% of the cases that you're writing before you leave the client's home. We'll also be getting involved in talking about our accelerated death benefit rider, which truly can provide some living benefits to your client at a time when it's needed most. So what about the qualified market where this money's coming from? Based on the current stats, we have about $2.7 trillion of in-force deferred annuities are out there. About 65% of this money is being tied up in the tax-qualified and employer-based plans, but about 35% of the funds are in those annuities that you're probably selling today. As you well know, if you're in the annuity marketplace or qualified, especially the annuity marketplace, a significant share of this money is simply being transferred to the next generation. We know annuities are great for growth and tax deferral, but the point is most people are not using the annuitization feature. That money is just simply passing along to the next generation. Of course, with any type of qualified plan, there is a requirement minimum distribution that starts at age 70.5. And as you well know, if the client decides that all they wanted to do with the money is to pass it to the next generation and they die, they're also passing the tax liability on the gain of that money to their family member who's probably in a higher tax bracket. So as we all agree, annuities are great products, but the question is the annuity the best product to purchase and to keep if the only plan you have is to die with that annuity? Well, we think there is a better solution with the Generation Legacy product. And let's conceptually think of Generation Legacy as a gift your client's trying to pass along to the next generation. And inside the gift box, you're going to help your client facilitate the transfer of funds from qualified plans or annuity products. Partial transfers as well as full transfers, however it works for them. Once that money is transferred into the product package, it actually is going into a qualified SPIA that's going to be used to fund premiums on the whole life product. So keep in mind, you're going to write a single application, and with that single app, we're going to issue both of these products, and once issued, they're seamlessly administered together by us. Nothing for the agent or the client to worry about. So over a period of either 7 or 10 years, depending on the issue age of the client, Baltimore Life will automatically make annual premium payments from the SPIA to pay premiums on that life product. So what dictates the payment pattern? It's the issue age. Clients 60 to 74 will issue a 10-year payout on the SPIA along with the 10-year paid-up life product. And for the clients that are 75 to 80, a 7-year payout on the SPIA along with the 7-year paid-up life product. But here's where the benefits really start to get rich, and it's in those situations where clients were to die during the period of time while the SPIA is funding that life insurance product. Well, we know that no matter when the death occurs, that if the client dies, we're always going to pay an income tax-free death benefit on that life insurance product based on the single premium paid. Of course, that death benefit is going to be greater than the single premium paid. But if the client were to die during those first 7 to 10 years while the SPIA is funding the life insurance each year, the remaining payments from the SPIA would also be paid to the named beneficiary. So the beneficiary is getting both, the income tax-free life insurance that's greater than the single premium paid, as well as the remaining payments from the SPIA. We'll talk more about those payouts in just a moment. So at the end of the 7 or 10-year period, the SPIA goes away. It's done its job. The life insurance product now is fully paid up, and it continues to provide an income tax-free death benefit greater than the single premium paid. It continues to provide cash value growth on a tax-deferred basis, and yes, continues to offer those accelerated death benefits we'll be talking about in more detail. So just as a summary, issue ages are 60 through age 80. We do base our pricing on current age or age at last birthday. Now, the reason this is important is because you're going to be dealing with the transfer of funds from other products and institutions. And that transfer process may take 20 to 35 days, let's say. We will issue the policy based on your client's age the day we receive the funds. Now, the minimum premium to get this started is only $5,000. How many clients do you have out there that have multiple annuity products they bought at different points in time, and their only goal, if you ask them, probably is that they might not need it for income. They simply want to pass it along to the next generation. Perfect prospects for this product. Keep in mind the average premium that we see on this product, even though the minimum is $5,000, is $60,000. Now, the maximum face amount that we'll issue on the life product based on the single premium paid is $450,000. And we do have 2 underwriting classes, non-tobacco and tobacco, and within those underwriting classes, we will issue any risk standard through Table 4. Cash values, they accumulate in the life insurance product on a non-participating basis, so there's a guaranteed cash value with no dividends declared. Partial surrenders are available from the life insurance policy cash value after the life product has become paid up, 7 or 10 years. Loans, they're available at any time at a maximum interest rate of 8%. So now let's start talking about the accelerated death benefit rider, because truly these can provide living benefits to your clients. Clearly, though, this is not designed to be a replacement or selling in lieu of a good long-term care product. I mean, clearly a long-term care product is going to provide a richer benefit, but of course it comes with a much richer premium, and that's why many of our seniors can't afford long-term care insurance. So isn't it nice to know that you can actually accelerate life insurance benefits and get that cash as a living benefit, and you can have it structured such that there's still going to be remaining life insurance benefits for the named beneficiary. So with our rider, there are 3 health event triggers that will allow you to accelerate the life insurance face amount, and they are terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. These riders can actually be accelerated any time after issue. So they're active immediately. The benefit is there immediately. The maximum that you can accelerate is $250,000. The minimum is $5,000. But here's the great news. The great news is that this benefit is paid out once. And it's paid out not only in a lump sum, but these are unrestricted funds. The client could use this money for whatever reason they deem needed. So now let's talk about the definition of these riders and the percentages of payout. There are two riders as they're broken out. The first rider covers terminal illness. Simply put here, the client's doctor needs to diagnose them as terminally ill with a life expectancy of 12 months or less. Here they can accelerate a maximum rate of 75% of the face amount. The second rider covers both qualified nursing and extended care. And for qualified nursing, the client needs to be diagnosed as chronically ill and confined to a nursing home facility continuously for 90 days with the expectation of a permanent confinement. For the extended care option, again, chronic illness needs to be the case, has been so for 90 days, but now they're requiring care provided by either a licensed home health care agency or a licensed or state-certified adult daycare center. In either the nursing home confinement or extended care situation, they can accelerate up to a maximum of 50%. Now, there are some states that have different percentages. We outline those variations of roughly 6 or 7 states on our state approval charts that can be found in our product toolkits. Two examples of that would be Pennsylvania and Indiana, who can accelerate at 65 and 40% as opposed to 75 and 50%. So what do we mean by chronically ill as it applies to the nursing home confinement and extended care situations? If the client satisfies either of these definitions, we consider them to be chronically ill. And the first one is they can't perform 2 out of 6 activities of daily living that you see on the screen. Maybe they're okay on their ADLs, but they could possibly be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them to be chronically ill. So let's look at some examples of how this payment could be made. This is a client who has a $100,000 face amount on the life product. We're going to say, for example, here they're terminally ill, 12 months or less to live, and they're electing to take the full accelerated benefit of 75%. So they could get a cash payment as a living benefit of $75,000. We do add a $100 service fee for that transaction, so the lien for this rider that they've taken the cash from would start at $75,100. Now, if they were to die immediately after taking the cash, no time for interest to accrue on the lien, the remaining life insurance benefit would be the face amount less the original lien, giving you net proceeds at death to the beneficiary income tax-free of $24,900. But here's the more practical example, and that is where the client dies 1 year after getting that $75,000 cash payment. So 1 year later, we have the face amount less the original lien plus 1 year's worth of interest, and we'll just use right now the maximum rate of 8%. That's $6,008, giving you a remaining life insurance benefit of $18,892. So these riders obviously are designed to be able to pay cash now but still have remaining life insurance benefit. And in this example, this client would have to live 4+ years in a terminal state for the interest to outrun the remaining death benefit. Pretty unlikely that that would happen. So could these riders in any situations terminate, you might say? Well, what if the whole life policy ends? And you're thinking to yourself, if the SPIA is funding the life insurance automatically each year, how does the life policy end? Well, let's use an example. Client comes to you year 1, they give you $100,000, they say, hey, this is leave behind money, let's set it up. And we set up a 10-pay SPIA with a 10 year paid up life policy. In year 2, they come to you and they say, well, I thought it was leave behind money, but I need that cash or as much as I can get back. You could end the life policy. It had very little cash value at that point, and the remaining 8 years of payments left in the SPIA would be paid out to that person over an 8-year period. Not the best scenario, and of course it would end the riders. If the client dies, we pay a death benefit instead. And also, if you accelerate this rider under, let's say, the nursing home provision at 50% and we pay it out, you cannot accelerate a second time. It's a once and done. The other thing to keep in mind, and I kind of pointed this out earlier, what if the interest exceeds the remaining death benefit? Extremely unlikely that that would happen, but if it did, the owner has the option to repay all or part of the lien at any time. Keep this qualified as a life insurance contract. Keep in mind, even though you accelerate a benefit, there's still cash value accumulating in the life insurance product. And if you accelerate a benefit, you cannot also have an active policy loan. One or the other is available. The last thing to say is that no matter whether you're accelerating our benefit or any company's similar benefit, please make sure you tell your client to consult with their tax advisor, because technically in certain situations, this benefit may, and the very operative word here is may, be considered taxable. So let's look quickly at a quick summary of the benefit payouts. This is a female 70 non-tobacco who puts $50,000 in year one. We would issue a life product of $78,000, nearly $451. So at 70, this client who had this annuity, let's say, you've increased her estate at 70 by well over $28,000. Knowing if she dies in the first 10 years, the remaining payments from the SPIA would also be paid. But let's look at those accelerated death benefit payments. This is real cash to a senior client who at end of life might want to take a trip, might need money for their care, whatever the reason might be. These are unrestricted funds, so that money is available. So that's a quick summary of what we just reviewed. What's another tax efficiency of this program? Well, we feel it has to do with the transfer of the funds. No matter whether you're transferring funds from an IRA, where the money's never been taxed before, or from an annuity where there's a basis and a gain, eventually Uncle Sam has to get paid, right? But because you're transferring money over, let's say, from an IRA into this product, because the money's being transferred into a qualified SPIA that's going to fund life insurance over a 7 or 10 year period, you're able, and the client's able, to spread the tax out over the same 7 or 10 year period. So yes, your policy owner will get a 1099 each year for the taxable portion of that rollover. No way to avoid that one, but the beauty is you're able to spread the tax out. Also, the payment we make each year from the SPIA to the life insurance product does satisfy the RMD rules. That's one that you don't have to worry about. And of course, at death, we know the life insurance is paid income tax free, but the remaining payments from the SPIA not used to fund the life insurance in a client's premature death would be paid to the named beneficiary. Now, the default method we make those remaining payments are annual payments, just like we would have used to fund the life insurance. But the Benny could say, you know what, I want a lesser commuted lump sum of those annual payments. We can do that. But in all cases, no matter how they take the money, the beneficiary will get a 1099 based on the distribution they've elected on the taxable portion. Only, again, from the SPIA. The life insurance is income tax free. One more thing on tax, and it has to do with the application. Because we're dealing with qualified funds, we have to ask the question on the application, do you want a withholding from the money you're rolling over? We have to ask the question, but this is not how the product was designed. We cannot accommodate a withholding. So please make sure you check on the application that you do not want tax withheld from the annuity you're rolling over. Otherwise, we've got to send everything back to you. We cannot issue this. The product doesn't work in calculations to do it that way, and also you're taking away the advantage of the client of spreading the tax out over 7 or 10 years. So now let's take a look at premiums to death benefits. And I want you to start thinking about those prospects and clients that you have out there who have annuities, who maybe you know they have these annuities, but you might not know what the goal of the funds actually are. Here's the 65-year-old who's got 50 grand in an annuity, and because they're 65, we're going to issue a 10-year payout on their SPIA, along with the 10-year limited premium payment whole life product. For the male, the face amount would be $77,361 and change, and for the female, the face is $87,031 and change. So what did you just do for this female 65 who just was trying to pass money along to their family? You've increased her estate by over $37,000, right? Not a bad deal if that's her goal anyway. She's going to love you for presenting this idea to her. Not to forget that if she dies in the first 10 years, the remaining payments from the SPIA would also be paid to her named beneficiary. Now, she may say to you, Kathy, I'm in a 25% tax bracket and I'm making 3% on the annuity. Wouldn't I be better off leaving the money there? It would take her over 19 years just to accumulate the $87,000+ that's always there in the life insurance benefit, knowing that the life insurance is always there to be paid income tax free. Here's the 75-year-old, a little older, shorter life expectancy, but the numbers still look good. At 50 grand at 75, we would issue a 7-year payout on the SPIA, along with the 7-year limited premium payment whole life product. The male, the face amount would be $61,516 and change, and for the female, just over $67,000. So even at 75, you've increased this lady's estate by over 17 grand. For the male, nearly $12,000. And knowing if they die in the first 7 years, the remaining payments from the SPIA would also be paid. I tell you this much, I'm a licensed agent myself. I've marketed this product for many years. Agents love it, but more importantly, clients love the concept. Once the client understands the asset transfer concept and you personalize the numbers for them, they're going to love it. If their goal is just to pass that money along. Not only will these people buy, but then they're also going to give you referrals, especially if you ask, obviously. So ask for referrals early and often for these people, because these senior clients do talk to their friends about these types of things, because they say, wow, this is a pretty good deal. I've even heard words from agents that they say their clients will ask, is this legal? Because they can't believe that in a low interest rate environment that we're in, that these types of options are out there for them to pass along much greater wealth in a tax-efficient way to their family members. So here's a ledger. This ledger is actually something that can be produced in one of a couple of different ways. You can either go to our agent website, to our Secure Solution Illustrator software, and generate a full proposal with the description of the project and the ledger, or you can use our Mobile Link software, which you can put on your phone, tablet, or any connected device. We'll talk about Mobile Link more in a moment. But here's the female 70, non-tobacco, who's got 50 grand in an annuity with a cost basis of 40,000. You can see in column 3 where the 50 grand goes in, and from that money, each year we're going to make an annual premium from the SPIA to the life product of $5,570. Out of that payment of premium, nearly $4,000 of it is excluded from tax. That's the basis. And based on the interest factor over 10 years, the 1099 your client would receive is approximately $1,571. The key there is the client needs to understand they're going to get that 1099. Do not surprise them, because that will not be good when you get that phone call. The ledger shows, of course, the death benefit of $78,451 and the commuted lump sum of the SPIA payment if the client were to die early. Keeping in mind that our ledger also would show the accumulated tax-deferred cash value. So once the client understands the concept of asset transfer, personalizing their numbers right here is a really great way to solidify what you've talked about and get you to an application. Speaking of an application, what about forms? We try to make this very simple. Out on our agent website, you will find product toolkits set up for every product that you're personally contracted for with us. And in that toolkit, as you'll see later, we really have everything you need to sell and market the products out there. Now, your first line of helping you is to pick up the phone and call Premier, because Premier understands this portfolio well. They understand the market well, the concepts, and they're going to be able to help you generate activity by different ideas and also help you with case consultation. But when you're needing the forms, you go to our website, you go to the Generation Legacy Product Toolkit, and in there you're going to see something called Printable Application and Forms Package. You'll answer a couple of quick questions. It'll automatically generate for you the forms that you need that you can print locally or order from us. Now, one of the things that's in this form package is our set of instructions. How do I go through the underwriting process? How do I get the forms into you that are completed? And then most importantly, how do I complete this point of sale underwriting interview, where as soon as you finish the app, in a short 12-minute interview, we're going to give you an underwriting decision well over 90% of the time, so you can finalize that sale, give the client immediate gratification of that approval. So we'll talk about that more in a minute. In our agent website, within that same product toolkit, again, all the things you need to sell and market our products are out there. We have client brochures, we have scripts, we have letters, personalized marketing flyers, our agent guides, just a number of things out there for your use, and I'll demo these in a moment. So now let's talk about the second product. That's our single premium whole life product. This is the sister product that in fact has the same goals for your client. Client wants to leave a legacy, increase their estate, income tax on an income tax-free death benefit with life insurance, but there's some key differences. The first of which is, where are the funds originating? For this product, funds originate from after-tax cash vehicles, CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. Another difference is the issue age, 50 to 85, broader issue age because we're working with after-tax cash funds. As you'll hear, we also have simplified underwriting through 8 tables. And this product also has the accelerated death benefit rider, which, by the way, is automatically included in both of these products upon issue in all states where it's approved. This rider actually, with our single premium whole life product, has a little bit more flexibility in how you can accelerate the benefits, and we'll talk about that in a moment. So again, issue ages are 50 to 85 based on current age or age at last birthday. 2 tiers of underwriting. So it's either non-tobacco or tobacco, level 1, which is standard through table 4, same you had for Generation Legacy. And the second tier or level is tables 5 through 8. So a client with a few more challenging health conditions would qualify. Minimum premium, $5,000. Not bad. How many people did you run across and work with have multiple CDs? You know, here's the money for my 3 kids, for my 5 grandchildren, for the great-grandkids, for the charity, that they've essentially compartmentalized the funds out there in CDs for that exact purpose of pass it along. Now, keep in mind that in today's interest rate environment that we've had for a long time, they're probably making less than 1% interest on those CDs, and they're getting 1099 on it. So if their only goal is to pass the money along, you're really doing them a favor by showing them this concept. Here's another scenario you might run into. What about that senior client who you're trying to sell a small face amount life insurance product to for final expense needs? And they say to you, you know, Kathy, I really don't need life insurance. I have a burial account set up. Well, that means one of 2 things. They either have a pre-arrangement at the local funeral home, or they've probably got a $15,000 CD in the bank that their kids know that's the money set aside to bury them. Here's how that role play might work with a 70-year-old female. Mrs. Jones, you're 70. You're going to live many more years. Costs are going to go up. What if I was able to show you a way to take that $15,000 CD and provide your family with nearly a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or an extended care situation, you could get at some of that cash to help for your end-of-life needs and still have it set up to have remaining life insurance benefits. Is that of interest to you? That's called the burial account concept. And I can't tell you how many agents get started selling these products exactly like that. They start selling small $5,000, $10,000, $15,000 premiums, but what happens is they quickly understand that the goal of being successful in this asset transfer market is you not only have to do good fact finds of finding the money, but you've got to find the intent and goal of that money. Now, we well know, and you know obviously because you live it every day, is that your senior clients oftentimes don't want to share the values that they have in these CDs. They'll tell you they have some CDs, but they won't share with you the values. I think what you'll find is that even though you recognize the fact that they have multiple CDs, that, you know, once they understand a concept of asset transfer and how it works, and you say, well, Mrs. Jones, you mentioned earlier that you have some CDs. I'd like to show you an example of how this can work based on what I just described to you. You know, how much would you like me to show you an example for? Oh, what could you do for $25,000? What could you do for $50,000? Then all of a sudden the money starts coming out of the closet. You show that proposal based on $25,000 and they say, wow, you can increase my estate by how much? And then they say, well, what would you do if I gave you $50,000? And then all of a sudden they get more confidence and they'll start giving you those figures to work with. The average premium, by the way, on this product is about $30,000. Now, the maximum face amount for the single premium whole life product is really expressed in terms of the maximum net amount at risk. And that's just the difference between the face amount that we issue and the premium paid. That gap is the net amount at risk. Cash values, they accumulate in this product again on a non-participating basis. But here's another big difference, partial surrenders. This product Starting after the first policy year offers partial surrenders within limits. So starting in policy year 2, you can take a 10% partial withdrawal from the available cash, 20% in year 3, 30% in year 4, 40% in year 5, and from the 6th year forward, 100% of the available cash can be taken as a partial surrender. Loans, they're still available, but why do a loan when you have such lucrative partial surrender capabilities? Let's talk about the accelerated death benefit rider. The same 3 health event triggers that I gave you earlier that were offered for Generation Legacy are the same 3 triggers you have here. The same idea of getting paid this benefit once in a lump sum, and again, these are unrestricted funds. But here's one of the differences, and the difference is this client may say to you, Kathy, I really don't need any life insurance. Can I take a full acceleration? Give me as much of that face amount as possible. You can do that. Or they might say, I do have a life insurance benefit, so out of that face amount of $100,000, let's keep $25,000 paid up over here and accelerate the other $75,000 at a certain percentage. That's called a partial acceleration. That can be done as well. So let's use some quick examples. Here's the terminal illness rider, trigger, 12 months or less to live, same as before. But here, if the client wants to do a full acceleration, they can do it at 95% of the face, less the $250 admin charge. For the qualified nursing home confinement, same definition to qualify, but now a full acceleration can be done at 90% less the $250 charge. And for extended care, home health care, and adult daycare, again, they can do a full acceleration at 80% less the $250 charge. Now, keep in mind, in all 3 of these examples, as I've said to you, you can do a partial acceleration, leaving a certain amount of the faces paid up, and then accelerating the balance of the face at these same percentages. For those of you that are new and haven't marketed accelerated death benefit riders before, you might say, well, why does it go from 95 to 90 to 80? Why does it go down? Well, keep in mind that anytime any company, not just us, any company advances a death benefit prior to when a death is going to happen, there's a cost for doing that. So when a client goes from terminal to nursing home to home health care, each of those steps means the client's going to live a little longer, which means that we've got to advance the death benefit a little sooner. And that's why the cost for doing that goes up a little bit. Chronic illness, same definition, 2 out of 6 activities of daily living, or a client suffering from a severe organic mental illness. Either definition qualifies them if they're in a nursing home or an extended care situation. So now let's look at premiums to death benefits. And I want you to start thinking about those clients out there who have, monies in CDs, money markets, mutual funds, clients that have 1035 situations where they might have paid up policies for the cash values are close to equaling the death benefit, or they have failing UL products. If they have at least $5,000 in premium, they're all in here. So at 65 for 50 grand, this male would issue a death benefit level 1 underwriting of nearly $82,000. And for the female, the face would be nearly $93,000. Let's not forget with this product, you have a second tier of underwriting, table 5 through 8. And in all ages and genders, you'll find the difference between level 1 and level 2 underwriting is only about $5,000 to $6,000. Not a bad reduction to get that second tier of underwriting available. So what did you just do for this lady who's making less than a point on her CD in the bank? It's leave behind money anyway. She doesn't need to live on it. What did you do for her? Well, you've increased her estate by nearly $43,000. And if she were in a 25% tax bracket making 3% on her money, which she's not in that CD, it would take her 28 years just to accumulate the nearly $43,000 that you bumped her estate by upon issue. Keeping in mind that that life insurance benefit of nearly $93,000 is going to be paid income tax free. Here's the 70-year-old, a little older, shorter life expectancy. Numbers still look sweet. For level 1, for the male, we're going to issue a death benefit of nearly $74,000. For the female, the death benefit's just over $82,000. And again, level 2 underwriting gives you that $5,000 to $6,000 reduction. So for a female 70 to see a bump of $32,000+ in her estate is certainly something that she's going to get excited about, knowing that her goal with that money, those compartmentalized CDs in the bank, for example, was just to pass it along. And you're showing her a much, much more lucrative way to do that, safe way to do that, and a guaranteed way of doing that. Same story on forms for this product. Go to the application and forms package, get the forms that you need, print them, order them from us, and again, get the instructions to do your point-of-sale underwriting. Same story of all the great marketing tools that we have out in the toolkit for this product. I'll show you a few of those in a moment. So we've talked about this point-of-sale underwriting. This is really the icing on the cake because it's nice, especially in an annuity situation or qualified funds, before you start a transfer process of those funds, or before in a cash situation you ask for a big check to be written, isn't it nice to know that you can get an immediate underwriting decision? Good for you, it's good for the client. So as soon as you finish writing that app, you're going to pick up the phone during call center hours and complete a short 12-minute interview with your client in our call center. We're going to be asking your client the same exact health questions you're completing on the paper app you're going to submit. The only difference is we're going to get permission right then and there to get the data we need to look at the MIB and the RX level. That way, when we're looking at that data and comparing it to the app, if there's any conflicting results, we can clarify it right then and there and make that immediate underwriting decision. After the interview is done, we're not going to give the underwriting decision to your client. We're going to give it to you, the agent. So if that call is happening immediately today while you're there, or we have to schedule something with your client and you're not able to participate on the call, you're the one that's going to get the underwriting decision. You're the one that's going to communicate it. Confirmation number will also be given to you that we ask you to write on the first page of the app and paperwork you're submitting. Once you get back to your office, send, scan or fax off everything to us so we can get the policy issued. And what about the phone numbers and the times? This is all in the app package. You'll see all these instructions when you print your forms out. But the phone number toll-free is 888-368-9678. The hours are 9 a.m. to 10:30 p.m. Monday through Thursday, as well as 9 a.m. to 6 p.m. on Fridays. These are Eastern times. We do support English and Spanish languages. Other languages are available upon request. And if you have a hearing impaired client, we do TTY services in English and Spanish. Please know, though, that this interview must be completed within 5 calendar days of completing your application. Now, you might say to yourself, hey, I write an app on a Saturday, or if it's after hours, what do I do? No matter when you finish the app, you want to pick up the phone, call the call center, leave your name and number, your client's name and number, and a date and time you want us to call them. We'll call the client at that specified time, get the interview done in 12 minutes or less, and then call you back again with the underwriting decision. The client's not going to hear that decision from us. They're going to hear it from you. Obviously, if you do this during normal hours, everything gets done at one time. You might ask, how do I pre-qualify a case using your application? Well, we do have an app for each product, and the reason we do is that for Generation Legacy, we have one tier of underwriting, for example, and because we have one tier of underwriting, we have one section of medical questions, a Part A. Think of the Part A questions as knockouts. If you get a yes in Part A, it means your client doesn't qualify through 4 tables of underwriting. But if you're all no to the answers to the questions in Part A, height and weight, MIB, and drug history look good, we're going to issue the Generation Legacy product. For single premium whole life, because we have 2 tiers of underwriting, we have a Part A and Part B. Still think of Part A questions as knockouts. If you get a yes in Part A, it means your client does not qualify through 8 tables of underwriting. But if you're all no in Parts A and B, height and weight, MIB, and drug history look good, we're going to issue that standard through Table 4, which is Tier 1. If you're all no in Part A but 1 yes in Part B, with everything else looking good, we're going to issue Tier 2, which is Tables 5 through Table 8. So with that, I'm going to do a quick changeover to another slide deck here, and we're going to talk about the some great sales ideas and marketing support that we provide you here at Baltimore Life. Again, I can't reiterate enough that your first call that you should be making for support is always to Premier. Great support staff there. Please let them help you, especially if you're new in this market. But once you, if you're looking for some tools and ideas, our site really is pretty robust. Out there, you're going to find marketing toolkits, or product toolkits, we like to call them, in all of our agent sites. And there's a product toolkit that's set up for every product you're contracted for with us. So the top of this screen shows the product toolkit, those color boxes. And inside the toolkit, this happens to be for Generation Legacy, you'll really find everything you need to sell and market us out there, whether it's the printable application and forms package we talked about, the state approval chart, our marketing materials that I'll show you some, our agent reference materials, training, product-related announcements, and just a number of other things. So let's talk about the first one that I alluded to earlier, and that was Mobile Link. You know, an agent guide is great. The old traditional paper agent guide, you can get that from our agent site, but most agents today want it quick and easy, and why not have it on your smartphone or smart tablet that you're working on? So if you go to this site address, mobile.vaultlife.com, that you see there on the screen, that's going to take you to a web page that will look like that center panel in white that you see on your screen. That's our Mobile Link site. And if you're on your smartphone, simply hit the shortcut on your phone that will allow you to save that site address as a link. It'll embed a link right to your phone with the Bolts for Life logo that says Mobile Link. Now you have an interactive agent guide in the palm of your hand. It has the product information, the underwriting guidelines, all the things you need to know to do your point-of-sale interviews, but more importantly, it has an interactive rate and value calculator. That ledger I showed you earlier in the session today with Generation Legacy, you can actually see that on your phone. I mean, I can't tell you how many times personally I've worked with clients who were trying, you know, we talked about the concept of asset transfer, and then they said, well, what could you do if I gave you 25 or 50,000? I could quickly bring this right up to them. I mean, these are non-illustrated products, so a signed illustration isn't needed. Everything you need with rate and value calculation is right there in your palm of your hand with Mobile Link for both of these products. We also have some great point of sale presentation material. This happens to be some screens out of our Generation Legacy point of sale presentation. It explains the concepts of asset transfer, features and benefits of a solution, key dialogue questions to be asking with your client, and then graphically we get into that concept with the gift box of how two products can work together as one. So there's a number of other pages in that presentation that I'd say to you, take a look. There's some great presentations for you to use out on our site. We also have our asset transfer analysis form. Now hopefully you have a good fact-finding tool that you use, because fact-finding, again, can't stress enough, is the key to your success in this market. But if you need something to supplement what you're doing, this is a great tool. The middle of the form allows you to record the client's current assets not needed for daily living, CDs, money markets, annuities, or whatever. And then you can quickly show them on the right of that, if they transfer a portion of those funds, how that will quickly increase their estate value. And of course, you can, again, use Mobile Link to quickly calculate how much of that money will equal how much face amount, and show right there the impact on their estate value. The bottom of the form allows you to record the client's current monthly income, because before you start playing with those funds, obviously you want to make sure they have enough monthly income now and going forward. The top of the form is where you have those key dialoguing questions, one of which is, Mrs. Jones, do you have money that you'd like to leave behind for your family or favorite charities that's really not needed for your daily living? And most people get the leave behind money concept, and if they don't, it's going to create a great conversation. There's another document on our product toolkit for both Generation Legacy and Single Premium Whole Life. It's called Single Premium Sales Ideas. And each of these sales ideas you see on the screen are highlighted in detail in that document. What I'd encourage you to do as you're reading that full set of sales ideas is have a blank sheet of paper alongside of you, because you're going to start thinking about people you can immediately go out and see. We've talked about, I think, just many of these. The annuity concept, people that have annuities that don't need it for daily living, great prospects for Generation Legacy. Some of the older paid-up life policies that people have, cash values are close to equaling death benefits. No matter whether it's 1 or 5 of these paid-up policies, if at least $5,000 of cash can be rolled, 1035 exchange that into Single Premium Whole Life and get a higher paid-up death benefit. What about the old ULs where they're maybe imploding, right? They need to be rescued. You at least have $5,000, you can give them a paid up death benefit. And then we talked about the burial account concept earlier. Many other ideas out there. Take a look at this document. We also had these great customizable marketing flyers. They explain the concepts of asset transfer, features and benefits of a solution, and then you can customize the flyer with your contact information and print as many as you need. Then we have something like this. This is an Excel file that you can download, and it's great when you're selling single premium whole life, because when people are saying, okay, I'll set up these multiple CDs for my grandkids, this is a great thing, right? Well, if you can show them that if they had $50,000 in the CD making 1% interest in a 28% tax bracket or whatever it might be, side by side, how does that look as compared to the single premium whole life death benefit? How much more are you able to pass along by doing it with the single premium whole life product? We have print ads out there that you can use. We have letters. We have phone approaches. We have third-party articles and white papers. All that is found, again, out on our agent website inside of our product toolkits. So one more slide before I finish up, Kathy, and it really has to do with our agent conference. I know Premier has some great incentives out there for you, and usually, you know, if you qualify for a Premier incentive, you're probably going to qualify for ours, because in order to get to our next agent trip, which is next May 16th through the 20th at the Omni Amelia Island Plantation Resort, all you need to do is write $600,000 of single premium business. And you might say, only? Well, $600,000 is probably one of the lower qualifying amounts out there. And when you look at the average premiums for these products being about $60,000 for Generation Legacy and $30,000 for single premium whole life, it doesn't take many to qualify. The great thing about our trip also is the fact that we don't have business meetings. It's all about fun. You and a guest, all expenses paid. Just have fun in the sun, enjoy it, enjoy flocking with some of the other leaders in our company that are out on that trip. So more information you can find on our agent trip can be found out on our agent website. And certainly if you have any questions whatsoever, first line of defense, pick up the phone and call Premier. If you'd like to, if you're doing business with us and need some information from us, pick up the phone and call our agent services number. That number toll-free is 877-533-2468, 877-533-2468 will get you agent services. On behalf of Baltimore Life, I certainly want to thank you again for participating on the call today. Thank Premier, one of our great long-term partners, to sponsor this call today. And we know you have a choice, and we appreciate you considering us for your business. Kathy?
Hey, Gary. Yep, thanks a lot, Gary. That was a lot of information. I know I took some extra notes. And that mobile link, I was actually downloading that as you were talking about it. That is very neat information. So that will help, I think, a lot of people when they're talking to their clients to be able to get on there. I do have some information if you want to get contracted with this company, because you do want to be able to get contracted first so you can actually go onto their website and see everything, be able to browse and get those marketing pieces, the scripts. I've had agents call and ask for scripts different times on the mailers, any type of information you have, even plans or software. Please feel free to call Premier, ask for Life Marketer. That number is 800-365-8208. My extension is 4022, or ask for Mark or Kelly or Melissa. Just ask for Life Marketer in general on that. And then I kind of been throwing out a challenge for everybody out there is, you know, your single pay whole life, when you talked about only $5,000 amount needed for a premium, talk to, go back out and find at least, 5 of your clients that have CD money. And if you're not talking to them about now, get some quotes, get some options to show them. Give us a call. We'll help you here to help you go back and give them the information in front of them and show them, what $5,000 is doing in the CD versus $5,000 being in a single pay option for them. And basically find out, what type of sales you're getting from that. So if you take out 5 cases, did you get 50% of them, or did you get all of them and land them in a good sale? And I've had agents call me back and tell me, just a small amount of business with Baltimore Life really increases their sales and their commissions on their end. And there's agents who they're still phenomenally talk about, what they've done a year or two ago, thinking that was the biggest transition of their life, of helping them build their business a little bit too. And you're right, agents do talk to other agents, clients talk to other clients and tell them what they're doing. So if you're talking to a client about a sales option, ask them another question, get a referral, get a lead, find out, what I've done for you today. Is this something that you know of anybody else that I can help in this situation? Here's my information to have them call me, or I can call them. That way you're actually getting some additional referral leads. I think we hit home on everything here, Gary, so if anyone's got any additional questions, please give us a call or let us know. I do have an agent, Joey, out there, says he's got a question. Nothing popped up as far as question. Oh, and yes, is this webinar recorded? And yes, we did record this, so if you want to listen to this again, we'll get this back out to you. It may be this afternoon before we see the recording, but we'll go ahead and make sure everybody has a chance to get a recording of this. There is a lot of valuable information. But Gary, thanks again. Every time you do these, I always pick up an extra hint or two as well, but as always, you're the man. You do really great at these webinars for us. Thank you so much.
Thanks, Kathy. Thanks, everyone.
Yeah. Thanks, everybody. Have a great day. Take care. Bye.